Hey guys, we are back again, and today's the news of the day is that the CPI data has been released, and as everybody expected, it was not positive, but vice versa, it even was a little slightly worse. So the market reacted with the dump, an abrupt dump that ended with the fast recovery, and but at the same time a lot of key altcoins have lost their global supports, so that has to be taken in consideration too. So what we got, the reaction of the market has been the same as it always does, according to the already accustomed scenario, when we are pricing in, because everybody expected nothing good from the CPI data. So the Bitcoin and the market and S&P, as you know it, if you follow it, were descending from our key resistance levels, and when the news came out, we had another the so-called last deep, and we found the key level, the key support level that we are holding here, as we said many times already, that this is a key level, 18,200, as you can see. And then after the news, we have the abrupt dump, and then we start the recovery, and we continue the recovery. Usually this is some kind of recovery that can last for a few weeks, some choppy, not a very confident recovery, and then we continue into the new month with the new descending mood, and we continue or either retesting the existing global support line, or we will be losing it and will mark the new lows. So this is what we have from Bitcoin, and as you can see, although we held this global support line, but we are still under global counter trend line. This blue line is a very important line that we have to break in order to go, as I told you many times, to go for at least in the $28,000 area. We need to break not only this global trend line, because we have a lot of resistance here too. If we enable our Kijun Sen Shift indicator, we can see it now. It is right in the spot of our Kijun resistance. So today we what is important here, that we have to follow how the daily is going to close, and most importantly the weekly, especially on altcoins, because on altcoins Bitcoin can seem a little bit bullish and look bullish, given the fact that it wasn't that volatile, but it can mislead you. For example, if Bitcoin starts the recovery, you will think that the market turned out bullish, but the altcoins who have more vivid red candles can provide you with the information that although we can have both the recovery on Bitcoin and the altcoins will tell you that their downside ride is not over yet, even if we have the recovery. So any bull run or ascending movement will be limited for some time, and that is okay. These choppy markets are okay because we need a lot of time to build a global accumulation zone to allow the big money, the smart money, who are now accumulating, the hedge funds, the exchanges, and other entities, to accumulate in the zones that represent a great interest for them. So If you follow me on Twitter or my previous videos, you know that it is important for us now to look at this daily closing. Even if it closes with the red candle here, then it would mean for me that most probably we will continue the dump, maybe. Even if we close with this green candle, it still is not bullish candle. But we will look at some traditional market indicators like S&P 500 and dollar index. And there are some interesting setups there that can provide us with some little hope to break this global resistance. So let's start with Bitcoin. If you follow me on Twitter, you know that I marked this possible scenario. I was hoping, for example, that this dip, that the last dip that we are going to have here is going to be a little bit deeper, that we will lose this support and will go to 16k. I don't know it yet whether we will do it so a little bit later, or we are going right now and we will break this global counter trend line, set back a little bit, and eventually, or here, we will break it and secure as support. I told you many times that 20,500 is a key level for us to hold in order to promote in a higher zone to 24, 26, 28,000 dollars. So we are done here with Bitcoin chart. I guess everything is understandable. Let's look at the S&P 500. Why we got bought back today so confidently? As you can see, this candle was a strong one, but never 100% bullish. Let's look at the S&P. What situation did we have here? Let me take it more clear to you. We'll remove these indicators and we'll look at the weekly for now. So definitely what we can see here. Let's look at our indicator. Let's add the 200 moving average. We were standing here upon it, and I told you at the beginning of the week that we have to hold this very relevant 200 moving average, otherwise we will dump towards the 3,300 or even here the 3,000, and losing that and closing under this on the high time frame under this 200 moving average is not good. And for example, we can see this the similar situation before, and after we closed under it on a weekly time frame, we dumped significantly. Then of course we bought back. That was in 2020. That was the reaction on the COVID, as you remember it. And of course we had the V-shaped recovery, but this time it is not a V-shaped an event-driven reaction of the market. It is a market structural reaction. It is more fundamental, so losing this 200 moving average could be a bad sign of the continuous downtrend, that it will last. So definitely when we dipped on the news that the CPI level is still high and higher than we expected, of course we dumped here, but then the market makers, they bought back significantly and promoted the price back above this 200 moving average in order to not to allow the price to close below it. And if we recover here and this setup already assumes that we are going to recover. We will retest here, for example, and we'll go for the retest of this key resistance here. If we enable or turn on our Kijun Sen, the resistance also is here at this the same spot. Of course, we can get back super trend, and it's still got to achieve this one. So okay, so there if we recover towards this resistance, of course we will be the Bitcoin and altcoins will have some recovery, and that will allow, I think, for Bitcoin to get to 24,000 to recover there. So the rest of it is a question then, because after that we will have to decide whether to. I highly doubt that we will break this resistance on the spot. We either get back down, retest it, and do it right here, this way. But there is also a chance that we are going to chop this chart on S&P 500, extending and expanding the choppy trading session in order for this S&P 500 to lean down, to lean over, so it will become going lower until the moment we reach our global trend line, and we will have eventually to touch it and to retest it. So basically we will be doing something like this, and eventually we will reach it. I think so. These are my assumptions. It is not guaranteed, of course, but I think that the market maker will want to keep the 200 moving average above, because if we lose it and close below, you can see what can happen here, and we already in a bad situation on the US and the worldwide financial markets. So it would be thoughtful for the market makers and to hold the price above 200 moving average. But that doesn't mean that we are going to start a huge recovery right on the spot. It is not going to be easy. The same confirmation I received from the dollar index. Let's look at it. An interesting situation here, because I was following it and shared this situation on my Twitter account a few days before. Let me just remove these drawings and let's look at it. We had a great ride here, very parabolic, and even more, it has become even more parabolic here, because as you can see, I thought, and I shared it with my subscribers on Twitter when I shared this setup, that I think that there's possibility for the US dollar to make the final push up and drawing the highest candle of its setup towards to 118, 120, 119 resistance, great resistance zone, as you can see here, and I put this magnet. So, but that is of course not guaranteed, but that would mean a culmination for me. That would be the spot where we could find the top and start reversing and going lower, for example, to this zone sooner or later. But today what we had, interesting situation. Also we tried to go up, then reversed, and I shared it with my subscribers that we are going to retest this 110, 109 support zone, and we actually did it, but we closed breaking this super trend support. That meant that we are going for the retest of this line that appeared here the moment we broke it. And what does it mean? If you follow me long enough and you know how this indicator works, it means that if we break it, we are going for the retest of this super trend resistance. And if we, for example, break it like here, we broke it here and went for the retest, and after that we broke it again, and logically we went higher because the trend has not changed. This sell indicator, this sell line resistance, it indicates if it gets rejected upon it, then it indicates that, for example, locally the trend has changed. And we didn't do that here, but here we broke it and went for the retest, and look what we got here. We got rejected right upon this counter trend line, this super trend resistance, and with a huge absorbing candle. It not looks that scary at the moment, but it will, I guess, by the end of the day. So technically this is a great sign for me that the next candle is going to be to the downside, and this will provide some relief and recovery for the S&P 500 and Bitcoin and the crypto markets in general. So technically what we are expecting here, that we are going back for the retest of this zone at least. Then what can happen after that? Let's look at the weekly. Doesn't tell us a lot, but the daily is telling us valuable information. So we have this global trend line. We have a global one and a midterm one. So if we can also, to help us, enable the Kijun Sen shift, and it would make the great sense for us. So we can do, so we are expecting a further descending here, and what next? We either recover it, find support here upon this line, or whatever you call it, and we push even higher to the, but that move has to be very strong to do that. But from what I see right now, it doesn't seem so likely. So there is a chance we either get back, recover, and get under it, retest, and go lower. And we are ending back at the global trend line at 104. Or maybe we are doing this way, going back here, losing it, recover it, retest this trend line as resistance already, go back down, lose this support line, retest it, get rejected, and get back to 104. So this situation and this candle is telling me that we have to be cautious at the moment with the dollar and other stuff, but this gives some chances for the recovery on the crypto and financial other stock markets, at least local recovery. Then of course some choppy market again, some attempt of the dollar to recover and maybe even slide under this one again, but it all is destined now to be back to this global trend line, the black one, sooner or later. So definitely you need to be prepared, and maybe this information will be valuable for you to trade safely and hope for their recoveries. Good luck to you guys.